Hello everybody, welcome to my YouTube channel, My Journey to Wealth. So in this channel I'm going to be uploading some raw and uncut footages of me learning some money making techniques online, as the channel suggests. I guess the point of this is just to document, I guess, like a story of how I would learn something from the start and then progress as I learn it through, I guess. So yeah. I'm going to try to make the footages as raw and uncut as possible so that you guys, or myself basically, knows what I've done throughout this whole thing, and I guess what could be improved upon in the future if I do relay or replay the footages back to myself again someday in the future. Um, there's probably going to be a lot of waffling since it's uncut, but you know, it is what it is. That's how I learn stuff, so yeah. Uh, as for a little bit about myself. I'm currently 22 years old and I'm a graduate with a Bachelor's of Engineering degree in Mechanical Engineering. Um, I guess I guess that's all the introduction done. So the first really technique I want to learn is Forex, and the reason I say Forex is because I think in just the YouTube videos I watched online, there was I think a 23-year-old Japanese forex trader who became like the youngest millionaire or something like that. So I just want to see, you know, how you could use that, and also it's just interesting to learn for me. That is. Um, so yeah, that's all the introduction out of the way. I have made, well, not have made, but I've opened up a new Word document just to make notes on everything I said. So Forex. Let's make this Arial. Right, okay. I guess heading 1. So, since I have zero knowledge regarding forex trading at all, I am going to start from the beginning. Uh, where do I start? I guess this is kind of, I mean, I've only graduated from uni, what was it, like last September, so, and for our last year we had to dissertation, and which is kind of like a project, which I guess this is almost like one as well. So I think the first step to do in a project is just trying to find out what existing information there is. So in our project we called it literature review, but I guess in this it would be like a current information review. So the sources of information I could get regarding forex, then well, it could be put as physical, and was it virtual, I guess? So virtual, I guess physical, we count things like books and magazines if they may still exist. Virtual websites, books, magazines, right, etc. Websites, videos, videos, etc. So actually, right, books, magazines. There we go, just to make it look nicer. So yeah, you guys are probably going to see I'm going to be doing a lot of this editing, so yeah. Websites, videos. Physical websites, videos. So I guess this is a sort of scope we have for the literature review or information search. Wait, let me search up how to conduct a literature review. Oh, this isn't like right, okay. To explain, this is the good paper. Let's see. Formulate. So they wrote formulate research questions and objectives. So research question. I guess the question we want answered is, what is Forex? Is that specific enough? I think so, right? What is Forex? Yeah, that's good enough for now. And objectives. Objectives. I guess this could be objectives. Find out what does find out what happens in Forex. Find out what happens in Forex. Find out how Forex is conducted. What else? Find out how Forex is conducted. Find out I'll just leave this two for now. Search for extant literature. Screening for conclusion. Right, okay, so physical. So to find the literature, let's make that heading 2. Heading 2. I guess it's information sources. Information sources. So you've got the physical, books, magazines, virtual. Yeah, I think these are good sources. So websites. Well, actually, we would need to do key search words or keywords. Yeah, that's it. Key search words. So before, let me just do keywords. This is important. I might as well write it down. Forex, obviously. I guess introduction, guide. Beginners. Yeah, probably these. Yeah, I think the next step would then just be to find some good sources. So we've got the official website here, which I've had a brief look at before. Why is there 2 UK websites? I guess we'll have a look at the UK one because I'm in UK. Got Investopedia. This one looks alright. Okay. Forex beginner's guide. What is Forex trading? Right, okay. So these look promising. So if I just do a new, how do I add a new page again? Next page, okay. So layout, bear with me. This section, do this. Let me just insert. Do I want to insert a table? Let me just think how I could, if I even need to tabulate or anything at all. Probably not. Let's just use education. Let's start with this one. So, actually, I'll just put a table in anyway, because why not? So, source name, results, I guess. Source name. So, what is this one? Investopedia. Yeah, that's what it's called. Layout to the left. They accessed the results. I need a link as well, don't I? Website link. So Investopedia, they accessed 01/01/2024. Website link. This is the website link. Result. So updated 7th of September 2023. How to trade and examples. Forex refers to the global electronic for trading international currencies. Right, okay, so this refers Forex, or briefly as FX. So let's put that FX in there. FX refers to the global electronic marketplace for trading international currencies and currency derivatives. No central physical location. No central physical location. What does that do? Where central? Yet the Forex market isn't. Yet the Forex market. Largest and most liquid market, largest and most liquid in the world by trading volume. Most of the trading's done through banks. Right, okay. Most of the trading is done through banks, brokers and financial institutions. Open 24 hours a day, so open 24 hours a day. 5 days a week. 5 days a week. Okay, so 5 days a week. Except for holidays. 5 days a week. Right, okay, so it's Monday till Friday then. The Forex market, or maybe the Forex is open on many holidays on which supermarkets are closed. The trading volume is low. Alright, okay, so except for holidays. Opens on many holidays on which stock markets are closed. However, opens on many holidays on which stock markets are closed. Though trading volume may be lower. Though trading volume may be lower. In its name, Forex is a portmanteau of foreign exchange, is often abbreviated as FX. Ah, right, okay. So, what does portmanteau even mean actually? Portmanteau. Portmanteau. A word blending of sounds. Oh, right, okay, so Forex is a word blending of sound. Forex is a word blending of sounds. Between, is it between? Yeah, between foreign and exchange. Often abbreviated as FX. Okay. Key takeaways. Yep. Forex is a global electronic currency trade, formally limited to government financial. Individuals can now, okay. A profit or loss results from a difference in the price. It's a global electronic currency trading. Yep, got that. Exchange government. Profit or loss results from the difference in the price at which the so a profit or a loss results from the difference in the price at which the trader bought and sold a currency pair. Results from currency traders do not deal in cash. Brokers generally roll over the position at the end of the day. Right, okay, so currency traders do not deal in cash. Brokers generally roll over the position. I don't know what broker means, but maybe get explained later on in the thing. So let me just do this. Layout, autofit, contents. There we go. And let's make this all center, except these, like that. Make that center. Right, okay. Understanding Forex use various analysis techniques to find the best entry and exit points for their trades. Right, currency traders do not deal in cash. Traders use various analysis techniques to find the best entry and exit. Find the best entry and exit points for their trades. Forex exists so that large amounts of one currency can be exchanged for the equivalent value of another currency at the current market rate. Forex exists so that large amounts of one currency can be exchanged for the equivalent value of another currency. FX exists so that large amounts of one currency can be exchanged for the equivalent value in another currency at the current market rate. Some of these trades occur because financial institutions, companies, or individuals have a business need to exchange one currency for another. For example, an American company may trade US dollars for Japanese yen in order to pay for merchandise that has been ordered from Japan and is payable in yen. Some of these trades occur because financial institutions occur. Right, okay, so some trades occur due to financial institutions, companies, or individuals have a business need to exchange one currency to another. E.G or I.E. An American company may need to buy stuff in Japan, so they exchange their dollars exchange their American dollars to Japanese yen. A great deal of forex trade exists to accommodate speculation. On the direction of currency values. A great deal of forex trade exists to accommodate speculation on the direction of currency values. Traders profit from the price movement of a particular pair of currencies. Right, okay, so traders profit from the price movement of a particular pair of currencies. A great deal of forex trade exists to accommodate speculation on the current direction of currency pairs. Traders. Right, okay. Forex pairs and quotes. Currencies being traded are listed in pairs. So, currencies being traded are listed in pairs. E.G. USD slash CAD EUR slash USD or USD slash JPY. These represent the US dollar versus Canadian dollar, the euro versus USD, the USD versus respectively. There will also be a price associated with each pair, such as 1.2569. If this price was associated with the USD, it means that it costs that Canadian to buy 1 USD. The USD has increased. Right, okay, so price is associated with each pair. Price associated with each pair. Such as i.e. for USD slash CAD, PSS slash CAD, the price is 1.252569. If this price is associated with USD pair, it means that it costs, so it costs 1.2569 CAD to buy 1 USD, isn't it? To buy 1 USD. So if this price increases to 1.3, was it 1.3336, increases to 1.3, it then costs 1.3336 CAD to buy 1 USD. Therefore USD increases, doesn't it? Because you would need more CAD to buy 1 USD. So increased in value, yes. So therefore therefore the USD has increased in value, whereas CAD has decreased in value. It now costs more CAD to buy 1 USD, yeah, because it costs more CAD to buy 1 USD. It's increased in value, whereas CAD is decreased because it costs more CAD to buy 1 USD, yeah. Forex lots. In the Forex market, currencies trade in lots called micro, mini and standard lots. Currencies trade in lots. Right, okay, so currencies are traded in lots. So micro equals 1000 units of given currency. Mini equals 10,000 and standard equals 100,000. This is obviously exchanging money on a larger scale than going to a bank to exchange $500 to take on a trip. When trading in electronic forex market, trades take place in blocks of currency, and they can be traded at any volume desired within the limits allowed by the individual trading account balance. For example, you can trade 7 micro lots, or 3 mini lots, or 75 standard lots. Right, okay. So this is obviously trading money on a large scale. Trading lots for larger scale. How large is the forex? The forex is unique. So the main size trading margin forex. The equities market. I'll need to learn about this later on as well. The largest foreign exchange located. Right, okay, so largest market, largest FX markets are located in major global financial centers centers including London, New York, Singapore, Tokyo, Frankfurt, Hong Kong, and Sydney. 10 biggest how to trade Forex. The Forex market is open 24 hours a day, 5 days a week. Have I written that? I think I have, yep. In a major final, this means I can buy or sell at virtually any hour. Right, okay. In the past, Forex was largely limited to governments. Now you can trade currencies. Now, many investment banks and retail brokers. When trading the Forex market, you're buying or selling the currency of a particular country relative to another currency. But there's no physical exchange of money as at a foreign exchange kiosk. In the world of electronic markets, traders usually take a position in a specific currency. In the world of electronic markets, traders usually take a position in a specific currency. Traders usually take a position in a specific currency with the hope that there will be some upward movement and strength in the currency they're buying or weakness if they're selling. So right, okay. So in the world of trading, traders take a specific currency and hope upward movement and strength in the profit in the currency that buys, and hope that there's upward movement and strength in the currency they're buying, and downwards movement and weakness in the currency they're selling. Is that right? So that they can make a profit. There's I think this is the right. There's upward movement. They're selling. So hope there's upward movement, strength in the currency they're buying. So by that they would mean, so if, take this example, if they purchased $1, that would mean they would want, if they're purchasing a USD against the CAD, they would want the one CAD to stay as one, or USD to stay as one, but the CAD to keep going up so that it costs more CAD to buy the USD, which makes the USD a stronger currency because you would need more CAD to get that one. But if they're selling, they would want, if they're selling the CAD for a USD, they will want it to drop, doesn't it? So that CAD costs less. So you can buy more USD, isn't that right? Or you can sell it. A currency is always traded, so if you sell a currency, you're buying another. If you sell a currency and if you're buying currency, you're selling another. Difference between your transaction or weakness. So if they're buying something, You're selling another one. If you're buying a currency, you're selling another currency. So if you're buying US dollars, you're selling the Canadian dollars. Right. Profits made on difference in concern. I'll need to read up more on this bit right here. This is a bit confusing. Spot transactions. Right, okay, so a spot market is ideal for immediate delivery, which is defined as 2 business days for most currency pairs. So a spot market is for immediate delivery. Spot market is for immediate delivery. A spot market deal is for immediate delivery. Defined as 2 business days for most currency pairs. Defined as 2 business days for most currency pairs. Major exception is a purchase, right? Major exception is for the purchase of or sale of USD slash CAD, which is settled in 1 business day. The business day excludes Saturdays, Sundays and legal holidays. Business day, right, okay, so business day excludes Saturdays, Sundays, is that Christmas holiday and legal holidays. Legal holidays in either currency of the traded pair. Neither currency of the trade. During Christmas Eve, some spot trades can take as long as 6 days to settle. Funds are exchanged on the settlement date, not the transaction date. Right, okay, so funds are exchanged on the settlement, is it called settlement? Settlement date, not the transaction date. The US dollar is the most actively traded currency. USD is the most actively traded currency. The euro is the most actively traded counter currency. Right, okay, so euro is the most actively traded counter currency. USD is the most actively traded. EUR is the most actively traded counter currency, followed by Japanese yen, followed by JP yen, Great British GBP, Great British Pound, and Chinese. What is the Chinese? CNY. Market moves are driven by a combination of speculation, economic strength and growth, and interest rate differentials. Right, okay, so market moves are driven by a combination of speculation, economic strength and growth and interest rate differentials. Forex rollover. Retail traders don't typically want to take delivery of currencies they buy. They are only interested in profiting from the differences between their transaction prices. Because of this, most retail brokers will automatically roll over their currency positions at 5 p.m. Eastern Time each day. What does rollover mean? Right, okay, so most retail brokers will automatically roll over their currency positions at 5 p.m. each day. The broker basically resets the positions and provides either credit or debit for the interest rate differential between the accrued currency and the pairs being held. The broker basically resets the positions and provides either credit or debit for the interest rate differential between the two. The trade carries on. Trader doesn't need to deliver or settle the transaction. The trader basically resets positions. Don't really know what that means, to be honest. Brokers basically resets the positions and provides either a credit or debit for the interest rate differentials between the two currency pairs being held. Trade carries. When the trade is closed, the trader realizes a profit or loss based on the original transaction price and price which closed. Right, okay. The rollover credits or debit could either add to this or gain to this. So when a trade is closed, either a profit or loss is gained based on the original transaction price and the price at which the trade was closed. The rollover credits or debits could either gain or could either add or subtract to this, or could either add or subtract to this transaction. Subtract from it. Since the Forex market is closed on Saturday, Sunday, the interest rate. So 5 days a week. Mondays to Friday, 5 days a week. Which is that? Mondays to Friday. Since the forex market is closed on Sunday, the interest rate or credit or debit from these days supplied on Wednesday. Right, okay, so credit applied on Wednesday. Therefore holding position at 5 p.m. Wednesday resulting in being credited with triple the usual amount. Okay, so for holding position at 5 p.m. on will result in being credited or debited triple the usual amount. Credited or debited. How many days have we got left? Oh, it's nearly there. Right, okay. Oh wait, where have I just gone? Okay. For how many? Still quite a lot actually. Forex forward transactions. How long have I been recording? I think 47 minutes. Right, okay, so I think I'm going to end it here for the first episode. I guess, yeah, because it's been too long. So, thank you guys for watching, if there's anyone watching that is. Yeah, I'll see you in the next video.